Good morning, everybody. How are we doing out there? Everybody give me a knock knock, please, if you can hear me. Obviously, notice the new digs that we're in. My night trader people got to see it yesterday. Let me know that you're out there, though, and everything's going well, please. There we go. I get my first knock knock from Chicago. Thank you very much, guys. Let me first start by saying, wow, it's been almost a week. It has been a week. Last Wednesday was the last time we got together and talked markets, right? Morning, everybody. Good morning. I'm so happy to be here with you. You can't imagine it. I told everybody yesterday in my night trader at 11 o'clock that my market mind was going crazy. It's been spinning for the last 5 days. Well, 4 days then. Just going. All kinds of ideas coming up. Obviously, in a new area here, a little bit of construction going on in the office upstairs. So I got forced downstairs, but that's okay. Got all the tools we need. Got you. Got everything ready to go. And I missed you, Bill. I missed everybody. Seriously. This is one of my favorite parts of the day, getting in here and talking a little bit about the markets, getting you guys ready to prepare to make some money. So don't do a week again. I'll try to stay away. It started with 2 days. Technology screwed us up yesterday or on Monday. And, yesterday we had a better day with the night traders. So we will be much better. There he is. There's ZB. That's what I was looking for. So we're going to jump right into it because I want to spend some time doing exactly what you like doing. I want to look through some charts. I also want to go through some of the points that I had stored up for Monday. Missed you guys too. Had stored up for Monday and kind of thought, you know what, even though it's 2 days later, I think we still need to talk about it because there are new opportunities in the market. Hey, how's it going, Jerry? I did not have a date night yesterday. Lay off me. I should have never let you know that. Don't we need to keep what happens in the live stream in the live stream. It's like a hockey locker room, guys. Hockey locker room is what we're talking about here. So let's go to the charts here. Or let's go to the slides first. I'm going to go through some of these slides. I do not have a Biden bunker. I do not have a Biden bunker. So, and for those of you that made comments that, you know what, the next $10,000 that I make in the market, maybe I should just buy new technology. I think I'm just going to go tap Shaw because Shaw's got some good technology. Or Tom. Tom, I'm doing a podcast with later this afternoon. I'm really excited about it. It's going to be fun. Tom and I are going to talk about options. We're going to talk about the market. It's something that is going to be shared, I know, with Tom's subscribers, as well as I'm sure mine. So something to look forward to. But man, maybe I'll hit him about his technology as well. Let's talk about what's going on. Forget the deal. Here come the politics. Have you noticed how Steve Mnuchin has kind of gone away into the backdrop here? And he said a few things yesterday on CNBC and talked about how if the House is coming back to talk about the U.S. Postal Service, they need to get busy on a deal for the fiscal stimulus. Didn't really do anything for the markets. The markets were driven higher simply because we're continuing to go up a wall of worry. Notice though, and I'll talk about this in a moment, the S&P 500 hits its new highs yesterday. But when I looked at it, 8 out of the 10, and I'm stretching that, it's really 7 out of the 10. Berkshire Hathaway is in the top 10 of the S&P 500, far from its highs. You've got Visa, not at its highs. You've got companies that are far from their highs that are in the top 20 right now. You and I know both, it's all been done by Google, Amazon, Facebook, et cetera, et cetera. It's a large cap tech that pulled the S&P 500 up. That concerns me just a little bit. Sorry, I tapped the microphone there. I hope I didn't blow your ears out. So we're going to talk about it. And somebody just asked a few moments ago, is anybody worried about a market top? I can specifically remember when the Dow Jones crossed 10,000 and they were throwing hats out on the exchange. 10,000 guys. They're throwing hats out on the exchange. 4 days later, the market reversed and started a correction. These mile markers, as I call them, big numbers, whether they're new highs, whether they're round numbers, et cetera, tend to get people thinking. It just gets you to, you want to look a review at the market, and that's what we're going to do. We're going to go old school on the market for a minute. I did this with my night trader people yesterday, so they're going to have to suffer through about 3 minutes worth of the discussion, but it's going to be worth it. We're also Going to talk tomorrow about some micro and small caps that are being revived by the market, the Robinhood market. I'm going to give you a little breakdown of that today. Tomorrow, I'm giving you 3 specific trades that are in that micro cap market, and I'll tell you why in just a few minutes. And then, of course, we're going to do today's headlines, trades, lows, and Target killing their numbers. There's also a company that I like that's coming up here in a week or so with their earnings. We'll look at their chart, and we're going to look at PlugPower and XPO because both of them just had good news this morning, and those are positions for my night trader people. So let's talk about the volatility storm that's coming. Right now, the VIX has been sitting down around 21, 22, bouncing around, as Jerry likes to put it, like as a BB in a box car. Yesterday, I used it's doing a shimmy sham down around the 21 level, actually closed higher as the S&P 500 was closing at its highs. So the VIX is closing highs at the same or moving higher at the same time that the market's closing on highs. Anybody that watches the VIX watches that and says, your ears perk up, kind of like the dog does when I get the food bowls out at night. So the ears perk up a little bit. The Trump administration believes, this is from this overnight, he's postponed trade talks with China last week and does not want to speak with them right now. Quote, we'll see what happens, unquote, when asked if we would pull out of the deal. So we're starting to see, I'll hit TJX, guys. We're starting to see a situation where the trade deal is going into the back burner. It's also now become a little bit of the front burner because this is a point that has to get solved now. The administration believes it's part that there is going to be possibly a deal on a $500 billion stimulus. Now think about that, $500 billion. We were talking about 2 trillion a couple weeks ago. Then it was down to 1 trillion. They were bickering over 500 billion between 1 and 2 trillion. Now we're down to $5 billion, which includes, of course, money for the post office, schools, and small businesses, which are the hot buttons right now. We'll see what happens here as we start to get into this political hotter season, because everybody's going to be ticked off because they're coming back from vacation and they got to talk about the U.S. Postal Service. So this is going to be a political storm that is going to start brewing up a little bit. Wall Street hasn't known which candidate to favor. We've seen the polls actually start to get tighter right now. That is one of the reasons that we'll start to see a little more volatility. When it goes to one side or the other, things should settle down, because that's when Wall Street says, okay, now we get to work at dealing with what we know is coming. Remember, uncertainty equals volatility. Right now, uncertainty is starting to go up around these elections. So believe what you want about the COVID-19. It's gone quiet for the last couple of weeks. And by quiet, I mean, you get your state updates, et cetera, but we haven't seen any headlines on Moderna, any headlines on AstraZeneca, any headlines on progress. It's just been, we're getting closer. Well, I know we're getting closer because each day passes. Just by the nature of what they're doing, they're getting closer. This is one of the larger risks that we head into flu and cold season, as well as allergies. And this is going to be one of those things that I think you're going to see over the next couple of weeks, a little bit more of a sensitivity to the COVID-19, especially as people talk about the economies in Florida starting to get the snowbirders that are going to maybe bail out on them. So all of this wraps up to one of the reasons why we look at sentiment. Sentiment is one of those things. And again, I shared this with the night trader people last night. Sentiment is one of those things I hold near and dear in my heart. I've been analyzing sentiment since 1999 when I worked for another options firm. And at that time, we quantified sentiment. We did a good job of figuring out how to quantify sentiment. There are a couple of different indicators that are out there that you need to watch. One of them is the VIX. Obviously, I talk about that a lot, but they all give you an idea of what the wall of worry is. I used that phrase back in 2000 on CNBC for the first time, the wall of worry. So this is something that's been around for a long time, and that's what we've seen stocks climbing up, a big old wall of worry. It's been worries about COVID. It's been worries about the economy. We got this hell of a V-shaped recovery in the stock market, and you've got an L in the economy right now. Maybe it's an H. I don't know. We'll see what it's going to be. We'll figure out which letter, and I love that we always just associate it with the letter now, but it looks like it's going to be more of an H, where everything started to come back up. Mortgage applications went down. That number came out earlier this morning because interest rates are edging higher. What's that do to the housing market? That is the lifeblood of some of this comeback right now. So Lately, there are signs that we're reading atop of that wall of worry that we could see building. This goes to whoever was asking about the questions about a possible top. Historically, it means it's one of the best times to start thinking about where stocks are going. Don't act right now, but it's time to start thinking about where stocks are going to go over the next 1 to 3 months. And keep in mind that we're going to have an election in the middle of this. We're going to have the volatility that comes with September. We're going to have all of these things that are going to come over. The next 1 to 3 months are going to be crazy, folks. It's going to be fun too. It's uncanny timing. But when you look at it, here's the first one of those indicators. And this is the granddaddy of the indicators, the equity put call ratio for the CBOE. This just tracks the equity options on a daily basis traded on the CBOE. You notice that we got down into this 40 level, 0.40, meaning there are 40. We got down to 36 and 35. And actually, this was a 33 reading in early June. But we got down into that 40 reading, meaning there are for every 100 calls at its natural state. So when you're out in the wild watching the market and it's doing whatever it wants to do in a normal state here, it usually trades around a 60 to 65, somewhere around there. You have some fear that comes into this. You can see that we go over 100 here, put call ratio is over 100. And whenever the 21-day moving average or the 10-day moving average gets up around 1.0, it tells you there are more puts being traded than calls. And that, my friends, is a sign of fear in the market that is usually capitulation. Look at what happened in March. That's exactly what we saw. These bottoms tell us that everybody's asleep, complacency. I call this the beginning of the slope of hope. Whenever we see this, you've got people that have fallen asleep here and they're very hopeful and maybe I don't need to worry about my portfolio now because this is over. Watch yourself when the equity put call ratio gets low. That's what it looks like historically. If we go back to 16, you can see obviously we're at our lowest readings here in the last 5 years or so. That gives me a little indication I need to be watching out for a potential tradable situation to the bottom. The good time to play defense is before the ball gets snapped here. So I just watched Hard Knocks, the second edition, and finally they're over the COVID procedures and they're starting to play a little football. So it's a little exciting for me. Maybe you'll get a few more football analogies. Anyhow, here's your Investors Intelligence Report. This comes to me from Yardini and Associates research company. Notice I'm just going to point one thing out, 3.59. 3.6 is your magic number for the Investors Intelligence. There are 3.6 bulls for every bear that are out there that are polled last week, and this was as of last Wednesday. That number is scary. That number tells us that the market is getting a little too optimistic. You saw numbers in 2017 that were actually higher, in 2018 that were higher. We had a different situation in the market then, but notice when you go back to 08, 09, and this is when we saw this act a little more normal. This is because we've got a different market environment, more people trading, etc., activity in the market. But that really, the 3 level, it puts you on alert. When you go above 3.6, my 15 years of looking at Investors Intelligence and tearing it apart from every angle tells me it's time to start considering the alternative to a market going straight up, which is what it's been doing. So, of course, I wrap it up with the VIX. The 20 level is where you're marked right now. We closed a little higher yesterday. 25 is that magic mark where we start to see people, they're going to start adding a little more of their positions, their volatility plays, and that turns into a self-fulfilling prophecy. At some point, somebody starts to sell. This is the crowded fire or theater situation when you see the VIX get low, and certainly we can go lower. We're not going to go back down into the teens because we're in a new era of volatility, but when we see it trolling a bottom like this, not going any lower, even though actual volatility in the market's going higher, you got to worry a little bit. When volatility, and there is your key there. When the VIX, the implied volatilities start to underperform the actual volatility, it tells you that we're asleep at the wheel. So what's it all mean? It means that the wall of worry is topping out. The combination of indicators doesn't tell you the market's hit a top. Today's not the top because I'm going through these with you. No, Far from it. We're going to open higher because Lowe's and Target came out with great earnings this morning, and things are getting fueled higher. Actually, the lows in the S&P 500 futures, which I haven't mentioned to this point yet, came at about 3:30, 4 o'clock in the morning this morning. So this is a market that's gaining momentum to the upside, and everybody loves the fact that we hit the all-time highs. It's not time to go full defense, but it is time to start putting a plan together and start avoiding some of those sectors like the financials that I've been pointing out, the travel stocks, all of those. You want to make sure that you're cleaning house right now. Portfolio rebalances. This is the time to do it when you've got a market that hits a new high. Call your advisor. Do it yourself if you do it yourself, but go out and trim some of those winners on your long-term investments. Don't cut your trades out, but take a look at your investment side, because that's where a lot of people lose most of their money. But it's time to start putting together a plan. So historically, the combination says that this is one of the best times to start thinking about stocks, where they go for the next 1 to 3 months. And in this case, you have to look at it and say, things are starting to add up. You now have more than one indicator, but you've got multiple indicators that are saying it's time to go down. You'll notice also as I go back to my screen and you get to see my shiny face. And I think it was ZB that made a point of the back of my head. Maybe I think that was your joke yesterday. The back of my head was the good side, but over my shoulder, every day now, you're going to start seeing ticker symbols popping up and little messages. And those of you that watch me and are maybe acutely aware are going to be able to pick up some tidbits of information from that board. It's something that I write on every day. A couple stock symbols go up there. You'll see right over this shoulder, I've got the VIX, the investors intelligence numbers, and then over the right up in the top there, sectors that you want to avoid and watch. I'll turn around and give you the good side of the head for a second. Transportations right now, and that is just trucking, CHRW, JB Hunt, companies like that. Microcap, we're going to talk about microcap stocks in a second. Semis, home builders, Lowe's, Target today coming out with good numbers. You know the retails associated with home builders. Large cap tech is still where it's at too, and that's why the S&P 500 is at that highs. The ones you want to avoid right now, zero volatility, zero movement. Those are financials, travel related. And energy, XLE, XOS, XOP, anything to do with energy. We've got a position right now in the energy sector in the night trader. It's starting to see its movement to the downside, but it's a flat line, zero volatility trade that, quite frankly, I need to get out of the portfolio. So you were talking about the girls. I'm not talking. I hope you're talking to somebody else. I'm not talking about girls on my screens. So let's go ahead and hit a few things. We're going to move on now to trading this morning's headlines. So, and this is, again, so many ideas going through my head. We could sit here for the next hour and a half. Yesterday, we spent an hour on the live stream with the night trader people, an hour, and I had to cut it off just because I had to get moving. But over the next couple of days, you're going to get a lot of trading ideas from me. And we're going to start just with the headlines, what I normally like to do every day. Target this morning, up 8.9% after beating top and bottom line estimates. This retailer has been knocking it out of the park. If you look at the trio, and I'll call them the golden trio of retail right now, and that would be Target, Costco, and Walmart. If you look at these companies right now, they're not really worried about back to school. And that's the one thing that you have to consider as the common denominator between them. Look at what happened to Kohl's yesterday. KSS, that ticker symbol, came out with their earnings, looked at the company and basically said, one of the notes in there was that the back to school season was looking soft. The back to school season looking soft gets you a nice big pullback in your stock. The stock's sitting at the 20-day right now. This has been a zero volatility play for the last month or two, as you can see, going sideways and not doing anything. Let's make the chart just a little bit larger for you. Going nowhere, doing anything. Now you've got a catalyst that's going to break this through. I'd use a word that I want to use because it has to do with something that's new that's coming up here in the next couple of weeks from me, actually next week. But it had one of its events here yesterday. This stock is actually going to probably start to make its way down to that 18-16 level. These retailers, for the most part, have been going to sleep. And let's take a good look. Now is a nice time. unfortunately, to go ahead and go take a look at that TJ Maxx. This is one of those companies that, as I told you, they would benefit over the longer run, because as we start to see some of that inventory make its way from the higher ends, those Macy's and all those people that haven't been able to sell anything for a while, to the likes of a TJ Maxx, you get that idea that they're set up for just a huge absolute move to the upside. Not the case here. They missed on their top line. Their comps were down 3%. They're not giving 2021 guidance. They beat on revenue though. So in this particular case, it's a mixed report. In some cases, the companies are getting rewarded for mixed reports here. TJ Maxx, not one of them right now. If you look at the stock, it made a little bit of run right ahead of the earnings announcement. We actually got up to the $60 level. I was loving it. It's trading down 5% right now. It's going to open up around $54. So we're going to be down at that 200-day and that 20-day moving average. Is the story over for TJ Maxx? No, the story is not over for TJ Maxx. This is I don't want to call it a flesh wound. This is going to be something, especially with the 2021 forecast being dropped right now. The company is still in that area of companies that are going to pick up cheap merchandise and be able to sell it. Five Below is another one that we'll continue to watch here. You can see that the company kind of bounced back up and has been trading in that range, much like TJ Maxx here. So what would my message be to you? And I'm kind of jumping to the big end of the slides here. And in some cases, especially Seinfeld did a good job of it, where you can start with the beginning and finish with or start with the end and finish with the beginning of your episode. He did that once, if you recall. But I'll give away one of the slides at the end. Ollie's coming up with earnings next week. And remember, we're in the middle of retail earnings season right now. Retail earnings season, when you look at the XRT, watch this chart. Nobody would have thought that it's able to go up this high. Of course, Amazon, Walmart, Costco, they have helped that number go higher. But when you get down into the nitty gritty of it, still love Ollie's. You and I haven't talked about Ollie's for some time right now. Ollie's bouncing off its 50-day moving average. Earnings are coming up in a week right now, trading at $104. When you and I started talking about this stock, it was down in the 50s right now, so it's more than doubled. The show's not over for Ollie's. I did my walk around Main Street 2 weeks ago, and the stores at Ollie's are still bustling. They've still got all kinds of stuff that's been sitting on other shelves, so they are executing much better in this environment. I like Ollie's to make its way up to 120 here, and I think that this is one of those stocks from the retail side that you can look at and say, you know what, it's going to be a good play through the end of the year. Watch that TJ Maxx, and that you're exactly right. Looking at that with the 50 level, it opens at 54. Let's go look at that TJ Maxx right now. I love that you're sharing that idea. Remember the sawtooth rally idea here. You should have, if you're in TJ Maxx and you bought it at 52.50, let's say, you're down here at 49.90 and it's up here at 60. You made your 12, well, you made, my gosh, you're 20%. Where'd my math go for a second? You've got your trailing stop in. It pulls back down here. I'd say right around that 50-day. It's not even at $50. Right around 53, 52.50 or so is where you're going to start to see support kick in for the stock. And that's where it gets added back to the portfolio with the sawtooth strategy, at least. Let's go back to the slides here. I'm going to digress, get back to the news. PlugPower. Yesterday, I gave you Monday, I gave you Ballard as one of the companies, and it's the cousin, the not as attractive, not as good looking cousin of PlugPower here. PLUG announces a new 1 kilowatt ProGen fuel system intended for small scale robotics, automatic, blah, blah, blah. Folks, this is one of those companies that you are going to see that sawtooth continue through the end of the year and into 2021. Hydrogen alternative fuel. Everybody's talking about batteries in Tesla. And should I short Tesla because it's gone through the roof? Do me a favor, please. And I shared this with my Night Trader people 11. Don't try to short Tesla. You can if you like, but please share your battle story with me afterwards. I've tried it. I've tried to short Amazon as well. Some stocks you learn that it's just not something. It's like stepping in front of the locomotive when you see it 20 feet away. It's not going to be able to stop. It's going to hit you. And in this particular case, you really got to have it good. You got to hit it just right to get one of these companies. PlugPower right now is one of those that is going to continue on its course with a little more volatility, making it a trader's dream. This is, and I love the fact that it has been brought up here by certain people who's actually sitting at the top of the chat right now and actually making a reference. I love it. This is an investment, aka long term. I had a great discussion with my, well, we'll call him what he is. He's my project manager, my product manager. He's my leader. He's my guide. He's my Sherpa. He is everything when it comes to what we talk about in terms of where products go. And one of the things we talked about, and this was 10:30 last night, was this comment exactly almost about the idea of investment in trading and how this system generates investing and trading ideas. And it's important for me to point out to you when it's an investing idea, when it's a trading, or when it's both. And that's what you've got with Plug Power. This is a stock that, if in full disclosure, I own shares in Plug Power. I have for a while, and I use my sawtooth method to get in and out of those. But I also have a nice large investment in an account that just sits there and it's been holding it since it was trading down around $2. So the idea here with Plug Power and why I go on this is right now you've got a stock that's going to go up another 2 or 3% this morning. It's going to hit $15 over the next couple of weeks. And I'm going to have my trailing stop in on my trading position on this. And I'm going to buy it back when it comes back to $12, which is what's going to happen. I don't have a crystal ball. I'm just looking at the chart enough for Plug Power that I know we're going to ring the 15 bell, then we're going to ring the 12 bell, and I'm going to be back in again. I'll try to tell you when that happens. You can see the stock's getting overbought, but this is also a great stock to hold into the end of the year. Look at leaps on it. Perhaps you look at the 15 leaps, the January 15, giving you a couple trade ideas on Plug Power. But Ballard is also coming up with its with the same, if you will, they've got the same technology, but they're actually trying to do it organically. Remember this dip that we saw right here, which is where I bought in my last time? This is actually where the company came out and said, we're offering a bunch of shares at 12 or 10.25. We're taking them off the shelves and we're selling them, our treasury stock, because they wanted to raise capital. Guess why? Because they're out there doing more acquisitions, which is what makes Plug Power so powerful. Watch the stock to run up to $15. It's going to sell off from its overbought signals at that point. You're seeing volume come in on it to the upside. That's why it's going to carry momentum up to the $15 level. And then you're going to target a $12 entry on that stock. Another one that is in the portfolio, the night trader portfolio, XPO, upgraded to overweight at KeyBank Capital Markets. Overweight. Stock's trading up about $84 this morning. This is just a great story of how data meets the market. XPO missed. Stock went down 14%. I came right back to my night trader people and said, hey, XPO usually rallies by an average of 9%. It didn't the day after it falls this large, but the data tells us that it is going to climb out of the hole. That's exactly what it did. We're seeing some profit taking after it got back up to those pre-earnings highs, a pullback to the traders trend line here, an upgrade gets us back up towards that 87.50. A position that looked like it should be thrown in the garbage is now coming back to our into our area where we're going to start getting profits again. Never doubt the data. I don't doubt it. Sometimes you just buy extra, and I wish I had when we came down here. But at the same time, XPO, nice upgrade. This stock's going to $100 before year end, folks, because trucking, transportation, logistics are the only area in transports that are working. Bonus here. And I already told you, Ollie's announcing next week, pull back to the 50-day, $100. You've got two things there. Support from 100, also some from the 50-day moving average. Ollie's beat last quarter when they came out. They also raised their guidance. The company is looking good in terms of their traffic. They're just doing it right. They're executing well. The stock is off of its overbought readings that we saw in June. That stock still continued to move higher. Overbought can always become more overbought, and that's a situation you'll see with Plug. But in this particular situation, we're starting to see volume come in on the stock too, which gets me a little excited as a trader. It means that we're going to see people get a little more active in Ollie's right before. If it pops up to 115 or so, I'm getting out before then. This is a position I think you could see go from maybe that 100 level to 115, a quick 15% in a week before earnings, because everybody's going to anticipate it. And then you're going to see a sell the news activity after that. Guy, I hear you on that as well. Right now, Opco trying to do the exact same thing. Funny was I was watching Hard Knocks last night. You see Opco all over the place because they're doing testing for the NFL, and all I can do is sit there and look at my son and say, "Why is this stock not going through the roof for me right now?" Patience, time, allow that option to play out. Lows, we're going to hit one more time too because they came out they're up 1.3%. The thing I'm pointing out here, 1.3%. Are you kidding me? Now, this is going to be a sell the news opportunity here in a couple of days. Lowe's right now getting obviously some strength because they've been just like Home Depot doing it right through the pandemic. Everybody's working on their house. I've painted rooms. I've painted an entire house. I've done all kinds of stuff, and so have you. So if we look at this from this perspective right now, this stock is ringing the bell at 160, hitting its highs right now. You're going to get a little push higher from this earnings beat, but everybody was imagining this was going to happen. Lots of volume came in ahead of it. I think you get a chance to pick this stock up at 150, 150 instead of the 162 or 163 that you're going to see it trade at later today. So watch that pullback. Home Depot, the same situation with their earnings yesterday. Let's get to some of your Q&A and charts. I love to talk about silver, you know that. And obviously with everybody heading back, and who loved the quote about John Boehner? He used to be my representative when he was in the House. I don't know if anybody saw this, but somebody asked him about if he was the mystery Republican that was going to back Biden. And his publicist or his whoever takes care of his PR said that he'd rather himself on fire than get involved with this election. I thought that was just funny for John Boehner to say. Funny guy, very funny guy, Southwest Ohio. Anyhow, I think it sums up exactly what we expect to see as this election hits. So everybody's coming back. They're going to start talking about a deal. 500 billion is not going to get anything really to worry about. When you look at silver, obviously, first thing I want to look at as the dollar. See what the dollar is doing. It's still sliding down its slope of hope. We're happy with the dollar going down, obviously, because we get some cheaper things coming into the United States. But silver is now going up. And this is a combination of not only the industrial stocks and some of the semiconductor stocks going higher, because remember, silver gets used in those products, but it's also fear of the dollar continuing to devalue. Silver is going to be a hold in your portfolio as an investment for the year, and it's also going to be a trade for the year. 2 weeks ago, we were talking about don't buy silver when it was at this high. It was way overbought, pulled right back down. Get into a position in silver, SLV. If you got there at 23 right now, you're trading back up to 27. You're going to see some profit taken again up at this 27 because everybody's going to remember what happened. This is just simple, good old fashioned profit taking, folks. Nothing more, nothing less. When you have a deal that gets announced, so you're going to see silver and gold start to take up a little bit of the trend and start to accelerate it. Kasich is his admirer, and he's made that clear for some time here. And John Kasich was actually a really good governor here, so I'm not going to speak ill of him at all. I think the guy is trying to do what's best for everybody. Gold making its way back up the GLD above 188. You're going to see gold take out its highs again here probably in the next 2 weeks. Following the traders trend line, we saw again profit taking here. Barrick Gold got an upgrade on Monday. And you're also seeing gold start to pop up on the 13Fs for some of these whale investors like George Soros, like Warren Buffett. They are getting into the gold miners. Barrick was added to Berkshire Hathaway. They took a position in Barrick Gold. So that should give you an indication that even the smart money, the slow smart money, the investor money is starting to pick it up. Another one that was added to Soros's fund was DraftKings. I thought this was really interesting. The stock showed up on the 13F for George Soros. Right now, making its way up to the $38 level, where it hopefully breaks through that. The NFL right now looking like it's going to get off to a good start, or at least a decent start. Even with college football dropping off, you're getting a lot of companies that are now starting to invest in online gambling. We do have a position in DraftKings in the night trader system that is now in the positive because of this recent rally. And again, we were down heavily when we got down to this 30 level. The company missed their earnings, had some awkward earnings news, let's call it, and now we're back on track above the 50-day moving average and trading higher. This is a nice position, but I tell my people, make sure that you're playing it within the right time frame, and they know what that time frame is because there's an event that's happening here that's going to push DraftKings, and then it's going to turn it into a sell the news. Make sure you know what that event is. Event. Got to go prep, Jerry. Go get. You're exactly right. Watch that target. Target TGT. Let's hit that chart real quickly. Have fun. Make some money today, Jerry. Is it 139 right now or 136? You popped out at 139 yesterday. Sell the news on target down to the traders trend line 128. You might even touch a 125 print on target right now. A lot of buying ahead of it. Remember, back to school season isn't going to be what it used to be, and Target is going to be one of the companies that quite frankly is going to affect Target more than it's going to affect Walmart and a few of the other Costco, obviously. Costco, Walmart, and to some degree Target have to be your holy trinity of retail right now. The ones that you're going to get a little pain from over the next few weeks, look at American Eagle Outfitters. They're going to break down and go below that 50-day and that 20-day moving average. These are companies that actually benefit just from back to school and the team being out there. Let's look at a couple of these stocks very quickly because I'm kind of hogging the time. My bad. And that's what happens again when I've got all of these questions. I'm going to go to the Q&A for just a minute. So if you're typing in the chat, I'm not going to think that I'm not going to be able to see you for just a minute here. So I'm just going to rip right through these. Do I think NVIDIA is a sell the news post earnings or it continues to run? NVIDIA about 80% of the time is a sell the news stock after their earnings. They come out with good numbers, whether it's good or bad. They come out with a good opportunity for you to sell the news. So and it's normally and simply just because right now it's run up from $440 up to $500. You got a round number there as well. The report comes out, pushes it a little bit higher, and then you're going to see it pull back down to that 440 level, and that's where you get in. NVIDIA is a perennial sell the news stock. So you'll get an opportunity on it. It's not like an Intel right now where Intel is just going to continue to go lower. That's a sell the news because the news was really crappy. Thoughts on the VIX is that the VIX is going to continue to bounce around the 22 level where I don't think we break down below 20. We get at some point here, and I mentioned that the volatility in the market is starting to outpace the volatility of the implieds. So the actual volatility is different than what the market's saying the volatility should be. And at some point, that is going to catch up and the VIX has to pop. Typically, it happens in the second part of August, and usually it goes up by more. I went through this with the night trader people yesterday. We see 12% increase on average in that second half, which translates into about that's in volatility, a 36% increase in the VIX. A 36% increase in the VIX right now takes you up above 30. And that's what I'm looking for on the VIX here. It'll be a quick bounce and then we'll have a pullback and then you'll get the volatility bounce that we normally see September, October, where we go up 35 and 40. What's a good entry point for TSM and Maine? I can't give exact entry points because I can't give out individual advice. You guys know that, but I look at Taiwan Semi here, and you know that they're doing all of Intel's bidding now because of what happened with Intel 3 weeks ago. You look at the stock; it popped up because of that news. 85. It's going to continue to consolidate here. I don't expect much. If you look at the XSD right now, the XXD has been flattening out as well. NVIDIA is going to be a big contributor as to where this goes, but I think the rotation out of semiconductor stocks into areas like trucking, into areas like some of the consumer discretionary, consumer staples is going to start to get a little heavier as we get closer to the election. So watch your XSD, watch Taiwan Semi. These are probably going to see a pullback here, and the entry becomes where the technicals are going to show you. Right now, the technicals for TSM say 7250s a place. I mean, if you can get a 6725 at the 50-day, that's exactly what you'd want to see. But a 7250 is split the difference, and now you start to see a stock that looks a little attractive right now. And the reason that is because you've got this gap here. Let's go look at one more view of this that'll give you a little more insight, especially because of that rally that we saw. There's your monthly right now on Taiwan Semi. very hard to buy this stock when it is this overbought. Last time it got overbought on a monthly basis like this, you saw it go from $60 down to 42. Now this is cheating because that's March, but let's just take the $60. Let's put our little drawing tool and take it down to here. So you got a 16% decline right there. Look for something in a 16 to 20% decline area before you start to grab shares of Taiwan when they're sitting up in that just rarefied air of $80 right now. IIVI, what happened to IIVI? Well, what happened was they missed on their earnings. They announced an acquisition. The stock pulled back, sitting at $44 right now. This is where I'm eyeing it for an addition. All disclosure, I have a position. I added a position myself in IIVI a while ago when it was brought to my attention. The stock, love the idea, love the location, obviously, because of Pittsburgh. But at the same time, you got to kick her to the downside because they announced that they're acquiring a company, and that's obviously going to cost them money. The stock is nearing an oversold reading, and you've got obviously a consolidation that happened at 44 here. I really wish when you start looking at the weeklies, and I hate going out to weeklies to start looking for trend lines, that I'd find me support, but 42.70 is where you're going to find some support, and that's from the 10-week moving average right there. This is going to be, again, coinciding with some of the bottom activity that we saw here. I think IIVI is still a stock that looks very good from the semiconductor sector. Little known, it's not an NVIDIA that's going to just get pulled all over the place because fund managers are giving upgrades on it. But and actually, NVIDIA has turned into one of the most loved stocks in the semiconductor sector, which tells me that the upside potential still remains, but it's not going to give you a trading opportunity. It's just an investment, not a trading stock in the semiconductor sector. 44 bucks, and then another run up to 52. And GLD 175. Call you hold anything that is silver or gold, guys. Cornelius from whatever had the bumble in it tells us that we love silver and gold, silver and gold. And what was the dentist's name? I forget what the dentist's name. Somebody throw that out there for me. That'll be your fun fact for the day. Camping World Holdings. Ernie, I think, was his name. Camping World Holdings. Let's take a look at. Do I think it's going to go to 40? Absolutely. I think it goes to 40 and beyond. The company got to sell the news after their earnings. The company's still trading above the 50-day and just broke above the 20-day yesterday. Got kicked back down below again. Watch for it to break up to 37.50. And then you've got a lot of calls, actually. ZB, if you're listening, you got a lot of calls at 37.50 that expire this Friday. You might see a little bit of a resistance to go any higher there. Until those calls, it's up at 40 right now, and actually the puts are at the 35 level. So some people 30 this week by Friday, and that's when it happens after that expiration. It's out of the way. Can I turn the volume up a little bit? It's a little late to do it, but there you go. I'm turning the volume up a little bit. I'm trying to also talk quietly so we don't get all kinds of bouncing around or echoes. We had some echoes yesterday. Let's look at Tesla's chart very quickly. I already told you, don't short Tesla. You're going to end up looking like you got run over by one. And I'm pretty sure that's got to be pretty ugly because they're low to the ground and they got the battery on the bottom. So heavily weighted. If it's up at 1900, let's call it 2000. I mean, at this point, we just round up because Tesla could hit it in a day or two. But when I look at the stock, this is one of those, and I described it yesterday as a stair-step stock. It goes up and then levels, and then goes up and then levels, and then goes up and then levels. I expect it to bounce between 18 and 1900 here over the next month or so before Elon tells us why it's so magnificent again. And that's when it goes up and takes a step over 2000. GERN where this is one of my, somebody's actually reading what I'm writing here, and I love it. Thanks very much. Geron Group. This is microcap, and this is not one of the stocks I'll give you tomorrow. We're going to do 3 microcap stocks tomorrow. GERN, I like it where it's trading right now, and it just opened at 181 for the morning as we get market trading underway. Look at the 50-day and how we bounced against that 50-day. Right now, the activity is telling me a break above that 50-day, and you saw some volume coming in yesterday. A break above that 50-day is going to take us to the point where the stock is now free to move up to $2.20. This is one of those micro cap stocks that I've been talking about that I think all of the opportunities are going to be had in. You're not going to find opportunities right now with your your FANG stocks and everything that's pushing the S&P 500. It is Hermie. Thank you very much. Awesome for the dentist. It is a situation where we're going to have to go a deeper dive into micro and small cap sectors. If we look at just one more, if I had to pick one more, I would say KMI, Kinder Morgan, trying to pull its way down to 14. This is a position in the night trader portfolio right now. The damn thing has gone flatline on me. This is the one I was talking about in the energy sector. Energy sector is bearish right now. If you look at the XLE, if you look at the XOS, if you look at all of these right now, they're just giving you zero reason to be bullish, and they're giving you reason to be bearish. Kinder Morgan right now trying to get this break down below 14 because the stock will pick up some volatility at that point and allow us to get out of the trade at a more reasonable loss. It could be a loss. I'd love to see a gain. It's going to take a monumental move right now. Kinder Morgan, among those that have just gone flatline and dead on you, is more of a long-term position. Okay, so the dividend 7.6% on Kinder Morgan. Whenever a dividend is over 4 or 5%, whenever it more than triples the 10-year, and that's easy to do right now. I can do but whenever you get 3 or 4 times more than what the 10-year is offering, you got to start looking at the company and whether or not the company is just a zombie dividend payer. And there have been tons of companies like this that eventually they just have to cut their dividend. And I think that's the situation that you've got right now, a 7.3% dividend yield on Kinder Morgan. I honestly wouldn't even be holding that. I mean, if you consider that you are down 20% over the last 3 months in Kinder Morgan, all of a sudden that 7% dividend gets real expensive. And if the trend keeps going down, you're paying for that dividend in a lower stock price. So watch the dividend trap is my point there. Not trying to make fun of the 7% dividend, but sometimes a dividend is high because the stock is going down and keeps going higher. Sure, if it goes down another 20%, guess what? The dividend's going to be 9 or 10% at that point. But it comes with the cost, and that is as long as you want to hold the stock for the next 10 years up to that, by all means, you're killing it in terms of what you're going to get at the CDs or anywhere else. That's it, guys. I'm going to be back at 11 o'clock with my night trader people, of course. And until then, I'm going to wish everybody else the best trading success. Hopefully, everything went a little smoother today. We'll see it again tomorrow. The same thing, same time, 8:45. I'll break down 3 of the small and micro cap stocks for you, as well as some headline trades and a few other surprises. Hope you had a great time. Hope you get out there and make some money with what we talked about today. And I wish you the best trading success. Have a great day, folks. Thanks a lot.